Welcome, welcome, welcome. We are live again. Your friends at the Legacy Wealth Capital Group. I got my partners Kyle and Sean with me. How y'all feeling today, gentlemen?
Outstanding.
Great, great.
Kyle called me. He was super excited earlier. He was like, we closed that sale. That sale came through. It's always lovely when you get that
Oh yeah.
sale and that deposit hit your account, and it's like magic. Kyle, tell me how that felt for you.
You know what? I got to be honest with you. Tyrus, you have made it, you've simplified it for Sean and I. So, we're old grunts. You know what I mean? I'm not speaking for Sean, but he older than me. but we old grunts, so we used to doing it, the ground pound way of getting things done. And you put it on autopilot. So, I mean, it was really easy. We gave the link to basically a colleague of ours. He turned around and went to it. Once he went to it, saw what was going on, bang, turn around, sign up right away. We're like, wow. So since our relationship with you, and now we've come together and formed Legacy Wealth Capital Group, it's just beautiful. You've shown us how to free up time, and basically grow a
Yeah.
business beyond what we're able to do. You've taken it, global for us now. So it's nothing but, man, everybody needs to understand one simple, source and what they do. And basically with that formed with, Capital Raising Academy, we've formed Legacy Wealth Capital Group, and we can scale other people's business like that. You're scaling our own business.
I love it. I've been this week. I've been on 5 panels, 100 plus business owners, and it's all about growing and scaling a business. Those are the topics. And so what I'm learning is most business owners don't understand the difference between growing and scaling because people like to use those terms interchangeably, but they're different. And so what I want to talk about tonight is that growth to scale journey, and then how capital raising can assist and when is the right time, because you can raise capital in the beginning, but are there more ideal times to raise capital? So I'm going to explain a model that I explained all week long. I've said it about 20 times about how to grow and scale a business and what that means, and then we'll break down each section and just go round table on what you guys think about it. So when we think about scaling a business, we first have to grow it because to scale a business takes money. There's no other way around it.
Number one.
Like, you got to have capital because scaling means you're either bringing in more people, you're bringing in more software, you're bringing in more tools, you're bringing in more resources to help elevate and launch. So it takes money. So what I talk about in scaling is number one, you focus on sales. And this is your growth period. So from start to grow, you're focusing on sales because you need capital and money in order to scale. Number two, once you get sales, you're actually selling something, you focus on profit because you can do revenues in $1 million, but if you spend 1.5 million, you don't have any money. And as you sell, then you have profit, you move to order. Order is where you start thinking about scaling the business. Order is where you bring in systems and processes and people and software and all of these things to pour that fuel on the fire. After you have order, then you can make more impact in your business, meaning you can reach more people. And then at the end, legacy. What do people remember about you when you exit the business, when you shut whatever you do with the business? You're done. What do people remember about you? What is your legacy? And so I always start from that pyramid, which Michael McCallum wrote about in Fix This Next. He says sales, profit, order, impact, legacy. Now, within sales, what does that mean? Marketing and acquisition. You have to actually acquire more clients and then close those clients. So within sales, you have marketing and you have closing. From your guys' perspective, when you talk to business owners every day, because I know you guys talk to them every day, and you talk about sales, what do you notice the most? What are you learning?
Well, I just want to say one thing. When you're doing venture capital, right, it's not so much you're trying to make a profit right now. The reason why is because the investors, the investor dollars that's coming in, that's giving you the money to operate, and that's giving you the money to grow, right? So the last thing, I don't know if it's the last thing, but they're not really concerned with profit. I mean, Amazon took what 13 years or something like that to make a
Mm-hmm.
profit. Uber is just now trying to make a profit right this year. So, but they've been operating on their revenues and investor dollars. So that's. I just wanted to kind of clear that up.
I like that, Sean. So let's go a little bit deeper right there.
Yeah.
So then let's say we take two different approaches.
Mm.
The bootstrap approach then would
Yeah.
be sales profit. So you
There you
can
go.
fund and
Yeah.
reinvest in your business. The
Yeah.
venture capital way would be sales because you want to have revenue, you want to show the trajectory,
Right.
but you utilize the investor dollar to create order in the
There you
business.
go. There you go. And the reason why is because you know the thing about it is if you're looking at scaling big, right? You can only scale so far if you're doing it yourself, right? If you're bootstrapping in the beginning, right? Um, Obviously, you only have a certain amount of money, right? But investor money is basically unlimited, right? So, um, if you're raising $1 billion and that's what you're using to operate for the next 5 years, then you have that to help you grow. So you're able to grow at a lot faster rate than just a normal person coming in with this, maybe $100,000 or whatever. If that makes sense to you.
Hmm. Absolutely. Kyle.
Yeah, well, there's a transition too. What Sean said is exactly right. And at some point in time, you're going to have to switch from living off of the investor dollars to now, growing your business. So it just depends when does that transition happen, and that's the reason why, Sean and I would work, like I said, we're talking to business all the time. We say like, well, who's your CFO? Who's your COO? Because they're going to be the ones that should be basically kind of paying attention to the operations and the finances, while the CEO, usually that's the person with the big brand, or the president, or whoever, the pushing the the rah 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 person. And you got to have those people there. One of the best books that I like to read, and best books I've ever read in my life, is the E Myth theory. And
Hmm.
the E Myth theory is based upon understanding that you go from being an entrepreneur and that bootstrapping to taking your business to that next level. But yeah, Sean's exactly right.
I love it. I like doing, and I'm gonna segue and kind of go a little bit deeper into that because that's something else that I brought up about growth and scale is that you can't do it alone.
Hmm.
The solopreneur will only go so far,
Of
and you
course.
need those team members, those other C-suite, we'll call them C-suite
Hmm.
people watching out for you. And E Myth is a great book. Michael Gerber, great book.
Yeah.
I've been listening to individuals lately saying though you shouldn't even look at being just the owner. You should look at your business as the investor. And so we go back to Robert Kiyosaki in the cash flow quadrant. He talks about the employee, the self-employed, the business owner, and then the investor. And
Right.
so why do I want to look at my business as an investor? Sean?
Um, I just think that first of all, um, there's probably millions of investors out there, and it's and these investors have all different types, and not only investors, but you have the investment groups out there, right? So you have the family offices out there. So you have so many different investment groups out there that they could literally, you have people out there that will literally fund everything available, that anything that people want, from small businesses to large businesses. So I just think that that's the only way I've been doing it, as utilizing investors.
Kyle, how about you? Investor hat.
I I would say it like this, and don't get me wrong. I don't want to be facetious. All right. We got some folks out there watching, listening to us. But every business needs to be meant to be sold. So I know some people going to say, no, no, it's my thing. It's my business. No, no. Your business is meant to be sold. So when you create that business, the day you create it, I know everybody's looking at visions of grandiose and want to pass it on to the family. What if your kids don't want to do it? What if you can't find any family members that want to take on what you want to do? My kids didn't want to do telecom. You know what? I thought I was building it for them. They weren't interested in that. So, my son, he majored in sport management. My daughter majored in, basically voice. So she's a praise and worship leader. So I'm sitting up there building a telecom company with Sean. And our family, our family members didn't want to be a part of that. So, as entrepreneurs, we've got to understand that, basically the business has to be built to be sold. So I'm thinking as an investor, who's going to want to buy this? Let me build this out to a way that basically, somebody's got to hit my number, whatever that number may be.
Can I add on to that too? And I agree with Kyle wholeheartedly, right? I just think that one of the best ways to accumulate wealth is to take your company public. That's one of the best ways. I mean, and we can just sit up here and do the math. If you got 30, 40 million shares and your stock go up to $5, I mean, that can be passed on to generation to generation. Cal said something the other day, and it was a pretty good. So I gotta steal it for our upcoming virtual event. He said something. He said, we don't go out and teach about stocks. We create them, right? And basically, what that means is you hear all of these people out here telling you to get rich. You can get rich invested in Microsoft or Google and all of this other stuff. I mean, you see everybody see them, right? Why not create your own? Create your own, build your company up, build it up to where, if you get up to $1 billion, right? If you're publicly trading, they're going to buy it for, or they're going to purchase it for 10 to 15 times more EBITDA, right? But if you're a private company, it's only, maybe 5 to 8 times. So there's a clear difference between a private company, selling a private company and selling a public company, publicly traded company. And another thing too, the Hiltons, right? The daughter didn't want to do the hotels, right? And I'm not doubting what Cal's saying at all. I'm just saying there's options, right? The daughter didn't want to do the hotels, right? What's her name?
Paris
Hilton, right? But what happened was they set up a board of directors, and the board of directors hired her on the CEO. That way it stayed in the family, right? And now she gets residuals coming in each month or whatever, every 2 weeks, almost like a paycheck from these Hilton brands or these Hilton chains. So, there's different ways to skin a cat, different ways of doing things. And that's one of the ways that you can kind of take advantage of it and keep it in your family.
Yeah, and let me just open up. Good job. What's going on, Damon? How you doing, Demond? But let me add this, because what Sean said is so vital. But I don't think people get it when he said that you could sell, and you could sell it, 10 times, 15 times EBITDA. I don't think people understand. Not only are you selling the company, and somebody's buying the company from you, but guess what else they have to pay for? The shares that you own. So again, like I say, we had 22 million shares. So not only are you buying the company, but you're buying our shares that we own. That's the reason why it's so valuable. So if you have a business, why wouldn't you? We talked to people. We had the conversation the other day, and somebody said to they got about what they say 100. What is it, like 100 million shares?
Yeah,
I think some of that. And we're like, why don't you have $1 billion? And they're like, what? What do you mean? And we're like, yeah, you don't have to put them all out. They could be in treasury, but just have $1 billion, authorized $1 billion. But now, how many do you own? Well, guess what? Sean and I each had 22 million, plus our other partner at 22 million. That's 60 million shares if we did 100 million. Think about that. So there's only 40 million that was out there. So how are you going to have enough in the float where you're selling hundreds and hundreds of millions of shares every day, all day long? But that's why it's so important. And when you get bought and somebody comes to buy you, they're buying your company, but they also have to pay you in your shares. And if they don't, then you just keep those shares and you drop them in the market. So that's the reason why.
I love it. So Devon
Can,
asked,
can I
most
address
small
this
bu-
this question? Okay,
Yep,
go ahead.
yep. I wanted to bring it up so you can address it. Go forward. Most small businesses would say there
Yeah.
isn't
So
enough investors. How do they find them?
yeah, believe me, it's it's more investors than you see McDonald's out there. It's a lot of investors. A lot of times, what people don't realize is, I mean, I'll give you an example, right? This week alone, right? We've called in our call room, our phone room, right? We've called approximately 8,000 potential investors, at least this week alone. So you add that number a month, let's just say 8,000, you add that number a month, and that's how many investors we spoke to. So it's so many investors out there, but a lot of times they're kind of discreet to where you don't know about them. You may not know a guy as an investor, right? Tyrus is an investor. I'm an investor. Cal's an investor, right? But nobody really knows that we invest as well. We invest, and not just money. We invest our time. We invest our knowledge. We invest uh, our network. A lot of times it's not just money, but it's the overall thing. The overall help of the
We
company.
just said
But
we
yeah,
just
there's
said
investors everywhere.
2,400. We just said 2,400 leads today to the call center. An additional
Yeah,
2,400 leads today. So they're going to start calling on those leads tomorrow. But basically, I mean, so there, that was a great question. Where they find them? Well, there's usually people that have access to them, and that's the reason why you have to pay. They're not going to just give that to you, and they're not just going to open it up because what do people need to grow their business? They need investors. So that's the reason why. If you take a look at our video that we have, we show you how important the investors are. Because what is the investor? Not just the investor. What is it? It's your bank. You can
Hmm.
go back to that investor over and over and over again and again and again, as long as you take care of the investor. Now, if you're out there blowing it and messing up, you ain't gonna be able to go back to that investor because what does the investor want? They want an ROI. But yeah, but basically that's what we do. And again, that's why we're venture capitalists.
Yeah, and just other ways, there are multiple ways of finding them. Like Sean said, you pull purchase list of investors, you have a call room, call them. You go to networking events, events that are catered to mergers and acquisitions or high net worth individuals or any place where they hang out. Go to the golf course, go to the country club. There are places where investors hang out, and you just have to be able to communicate with them and let them know that your idea, as Kyle would say, has sizzle. And so from there, you can create marketing campaigns. Like there's just so many ways to generate investor leads. It's enough. There are trillions of dollars out there of investing dollars from the low level investor, and I don't want to call them low level, to the institutional Black Rocks and all along the way. So it's not a lack. You'll be able to find them. And for everybody that just joined us, we're talking about just the difference between growing and scaling and how capital raising can help you along that journey. And what we've already kind of figured out was there's the bootstrapping way where you have sales, you need profit so you can reinvest the profits into the business. And then you move into order, which is your scale. And then there's the venture capital way where you start with your revenues and then you go out and get investors and allow them to fund your business so it continue to grow. I was telling people on the call, and like and share this because this information that we're sharing, I don't hear it everywhere. And when I do hear it, I have to find the room to get in and pay to get in the room to hear the information. So share this with the business owners in your life, the entrepreneurs in your life, the people who are tired of going to banks. They don't know where they can get the next dollar from. They're trying to figure out how to grow. Share this so we could grow this thing. The other thing that I was telling a lot of the business owners on those calls was mindset. Like 90% of this is belief that you can do it and that it's possible for you. Because a lot of business owners don't believe they can raise capital. They don't believe that it's easy to talk to an investor. And I wouldn't say it's necessarily that easy if you are very new, but it is simple. It's a simple conversation.
Hmm.
Here's my idea. Here's how I plan to generate revenue. Here's how you get your money back. And over what amount of time? Do you want to take this journey with me? And I think Demar, he asked the question, I didn't even read it. What would you say a business owner should be prepared to do when working with investors and taking their investment? I'm gonna let Sean and Kyle answer. I'm gonna give a very simple answer. Do what you said you was gonna do and show up and sell the product, sell the service, do what you're gonna do with the use of proceeds, and I'll let them go into that a little bit deeper. Grow the business, but go for it.
Yeah, I would say, Demond, you need to get in our class. You need to get in the
Yeah.
Capital Raising Academy because we go over all that. And you want the answers right now, but you need to go in there. But this is the biggest thing that we find out when we talk to investors. Or no, I don't want to say investors. Let me switch that. This is the biggest thing we find out when we talk to business owners. Business owners do not know how to talk to investors. So you know what happens? A business owner tries to sell an investor on their widget, their gadget, their service, their product. An investor doesn't want to know that. As an investor, I could care less what your widget, what your gadget, what your product does. It doesn't matter. Like Tyler said, all I want to know is, does it have sizzle? Is it hot? Will somebody jump on it? Does it make sense? And if that's the case, now we want to know, okay, can we get an ROI on it? How long will it take and when will we get it back? And more than likely, I want it to be less than a year. Okay. But other than that, don't talk to an investor about your product or your service or your widget or gadget. You need to share with them ROI. That's basically what I would share with businesses.
Yeah, I would say a solid exit strategy as well. I mean, if you're doing, um, interest, dividends or interest or whatever, of a good interest, you can't be competitive with a bank because regardless of what you think of your company is considered high risk, right? So if your interest or your rates or whatever you're paying back to the investor is basically the same as you could get to a bank, investors not going to want to do it. So you got to go a little bit above and beyond. So we try to say a good sweet area is anywhere between 10 and 15% instead of 5 to 8% or something like that. Also, too, going public, that's a solid exit strategy. And for business owners, imagine you're able to raise $10 million and not have to pay the money back. Let me repeat that. You can raise $10 million, 20 or 30 or 50 or 100. If you got $1 billion operation, you can raise $1 billion raise and not have to pay that money back. Why is that? Because when you go public, you don't participate in the public markets, right? The investor gets the money back when the company goes public. You ain't got nothing to do with that. That's the market makers and things of that nature, right? That's making a market on the shares. But you don't have nothing to do with that. The only thing what your job is to build up them shares so that it's valuable when it goes to the public markets. But you can literally raise unlimited money. Elon Musk raised $6 billion. $6 billion. He ain't paying 1 cent back. That means he's on payroll. His people on payroll. He's taking care of his operation. He's building a product from zero to what he have, and he's using investors' money for it. And then he goes to the government and gets more money. So it's like, it's free money basically. well, I won't say it's free, but you know, you don't have to pay that money back. There's no interest rates or nothing, no loans or anything. You're using investors' money to take yourself to the next level.
And I would even add this, you know what an accredited investor is. A lot of people don't even know the difference between an unsophisticated investor and an accredited investor. So if you don't know what an accredited investor is, how do you know how to present something to them? Because guess what they're going to do? They're going to ask you, hey, okay, well, I'm an accredited investor. And if you don't know what that is, you don't know the definition of it, you could be basically, putting your foot in a hole because you're like, uh-oh, how do I answer this? How do I talk to them? You don't even know what that means. So understand what's the difference between a credit investor and a non-accredited investor, or a sophisticated investor and a non-sophisticated, because that right there is the beginning of basically you trying to get money. We talked to one guy that he's like, oh yeah, I looked at his website and it said, yeah, investors. I said, oh, okay, great. What instrument are you using? He said, huh? Well, like you're taking money right now and you don't have an instrument.
Yeah.
You're going to end up on my favorite television show, American Greed. Because anybody, I'm telling you right now, if anybody, when you watch American Greed, all you have to do is take a look and say, man, if they were just using a financial instrument, they wouldn't be on American Greed. But because they schemed up some kind of way to take somebody's money through some attorney or whatever that wasn't an SEC attorney or a FINRA attorney, and now guess what happens? They end up basically on American Greed.
And Levy said it's a mindset as well, right? It is a mindset. It's a mindset that you can do this, right? It's a mindset that you can speak to investors and get money from them. An investor wouldn't invest in anything. They're gamblers, right? These are the same guys you see in betting all of it on in a blackjack game. These are the same guys, right? They're greedy. They're gamblers, and they want the next best thing. And if you could present them the next best thing, and I'm not saying lying to them, don't lie to them, don't never lie. But if you could present them a product, a quality product that's going to, increase their money 5, 10, 20 fold at a smaller company, 50 fold, they're going to be happy with that. So, it's all a mindset and thinking how you can get your company up to that next level as well.
I want to go a little bit deeper into the mindset thing. Because if we know that mindset is 90% of it, let's just start today with everybody that's listening. Start thinking of this from an investor mindset. You are no longer a business owner, you're an investor. The business that you actually have ownership in is now an asset. And that asset is a part of your overall portfolio. You may have some real estate, you may have some stocks, you might even still be working a 9 to 5. That's income. And then you have this business, which is an asset. If you think about it like that, then you're not tied to it and emotionally attached to it and make emotional based decisions. Like Kyle said, when you're thinking about building this from the beginning to sell, you're putting in the right operations, the right procedures, the right people, the right systems. And you're building this thing so it's not based on key man value, which means you're the key person. Because people don't want to buy a business if the owner is tied up and the revenue is tied to the owner. Meaning if you don't go with the business has no revenue. That's what a key man, heavy dependent business is. And I was actually looking at some multiples, and they said that usually a business that is owner dependent, very few employees, has good revenue, sells for maybe 2x, 1.5 to 2x. And that's because I can't just take the business without you. And then now you have to become an employee and stay on for a little bit and you get a salary because you didn't start it with the end in mind, to Damon's point. But if you start a business thinking about, and this is where the capital raising comes in, because now you're all asking the question, well, how do I hire all these people and do all this stuff? Well, it's an asset. And I'm thinking like an investor. So my immediate thought is, as I start this business and I'm getting a little bit of traction, let me go ahead and start the capital raise period to bring the money in, to Sean's point, to pay my payroll, me on it too, to pay for the services and the systems and the product development and the manufacturing and the whatever you need to pay for using investor money. And then you continue to grow and grow and grow and scale. And as Kyle mentioned, there is a point to where you stop taking investor money and you start using the business money. But at that point, you're probably a stable business, right, Kyle? You're probably at a position to where you can now actually reinvest back into business. You have enough revenue and enough profits to do that. So it's literally a transition, a transformation, and just a change in the way you're going about this day to day. Instead of waking up thinking about, oh, I got to go drag myself to do the work again. I got to worry about this. Put your mind to, how can I go find some investors? I want everybody to do this. I want you to take your phone, and while you're listening to us talk, just go through your contact list and see who might be a person, whether they have money or maybe they can connect you to some money. Just go through your phone. And I pick Fridays. Fridays is my day to reach out to people in my phone. I just go through my phone and I pick somebody that I ain't talked to in a long time. And I'm not saying you go and call and beg them for money. You just call in and say, how you doing, what you doing, and here's what I'm up to. I had a conversation with my dad's first cousin. I didn't really know them, talk to them growing up, but as I'm an adult, they're adult. Now we try and make connections. I told him everything that I was doing, and he was like, you know what, cuz, I had just invested, I think he said $35,000 in a business.
Wow.
Kyle, I didn't know he was an investor. I knew that he did real estate. I knew he had some property, but I didn't know he did anything else. And he said, when that gets to a certain point, just let me know what you're doing.
Right.
Go
Right.
through your phone. Like, be resourceful and stop using the excuses, because you don't know who you have in your phone that has another person in their phone who has another person in their phone. And all they need to do is hear an idea, because that's what we're not talking about. We're not talking about ideas enough. They say wealthy people sit around and talk about ideas, and they talk about it for generations. Poor people talk about money. I need this. I need to pay this bill. I need to get this money coming in. I don't know what it is. And that's the whole conversation.
Right.
Nobody wants to talk to you about being broke.
Right.
But if you're sharing a vision and you're sharing hope and you're sharing your thoughts, you might get a person on the other end and say, you know what? Kyle was talking about raising this capital for this business. It sounded great. And I remember somebody else saying that they were looking for an investment. And there you go.
Yeah. Yeah.
Yeah. Yeah.
Also, you got to get out. Go ahead, Cal. Go ahead.
I just say, it's funny. Sean and I had a conversation last night. I mean, we do this. We live, we sleep, we eat, we drink, we do this business. So, I mean, it don't matter. 11 o'clock at night, I'm like, I'm texting Sean or whatever, we talking. 5 o'clock in the morning, yo, Sean, what's going on? We're doing. He's sending me stuff. We're talking, we do it. I mean, all the time. But what's crazy about this is that there's a buddy of mine, right? I've known him for years, and he's always coming up in my feed, always coming up in my feed. Just what you said, Tyrus. So on Facebook, so I keep looking. So then the other day, I just happened to reach out to him and say, hey, man, you keep coming up in my feed. For some reason, I'm supposed to talk to you. Guess what happened? He needs funding.
Yeah.
Sean and I was on the call with him yesterday on a Zoom with him and his partner, but they need funding. They've got a drink, some type of drink that they had or whatever, and basically they kind of shut it down during COVID, but now they need assistance. So we're probably going to be working something with them. Guess what they need? They need social media. They need a social media part of what they're doing. So guess what? Now that involves you, Tyrus, and what you could do to bring to the table.
Right.
Getting customer acquisition for them, and also getting
Absolutely.
investors, because now what do? We do a regulation A. We do a regulation 506C or B or C or no C. We do a regulation CF. Any one of those deal with general solicitation. Well, guess what? If you don't know what the Jobs Act is, you need to be in our class because what is the Jobs Act? What is it about? Do you know? You need to be in our class because if you're a business owner and you don't know anything about the Jobs Act, you are basically shortchanging yourself.
And if
And
you
it's
don't
funny
do
because
anything, go Google it.
Tyrus, they said Obama ain't never do nothing for us. He ain't never. He presented the Jobs Act. That's enough. That's enough. The Jobs Act is enough because that gives the ability for small companies like us to take advantage of what larger companies have been doing for decades. It gives us the opportunity. When we took our company public, we had to do it from doing a reverse merger. That was the only way of doing it. Now you're able to participate in your own IPO. So imagine that, Tyrus, you having your own company and you're participating in your own IPO. That's, I mean, an IPO is people's dream, a lot of people's dreams, right?
Yeah.
Initial public offering, that's a lot of people's dreams, right? And so Obama made that happen. So whether you say he didn't do anything, he did that. And that right there can create generational wealth for you so your grandkids can live off of it.
Yeah, that's good. Kyle said something that I want to go a little deep into. Well, I don't know if we're gonna get to impact and legacy tonight. We're on sales, profit, and order, which is a good topic. But Kyle, you said something, and I actually brought this up to the panel that I was doing right before we jumped on this live. I told them that it's limited mindset for you to be the 100% owner of your business.
Of course.
Because as the host did my bio and she was listing out the businesses that I'm a partner in, I realized that I have grown so much by being a partner, not by being the 100% sole owner and this is my thing, my baby. And what you said earlier, Kyle, was you were talking to someone that needed something from you and Sean, and then they needed something from me. That's what partnership does.
Mm-hmm.
You bring all of the best into one, and you're able to create those services. So this is something, and I'm gonna let you guys dive into this piece. This is something for everybody listening. If you believe, and I'm gonna say this, and it might hit your toe, you might be mad at me, you might not ever come back. If you believe that you have to own 100% of your business, you have a limited mindset. Now I'm gonna let Kyle and Sean break down why I said that. But if you're here saying I don't want to have no partner, I want to have 100%, you won't ever be a billionaire.
Yeah,
You
true.
won't ever be a decamillionaire. You might make $1 million, but that's probably where you'll stay if you get there, because not even 7% of businesses actually hit the $1 million mark.
Yeah, I'm gonna start this. I'm gonna let Sean end it because Sean's got a powerful ending. But and I always like to tell this story. I mean, it is crazy. And I guess what it is, Tyrus, is this. Most people talking about this subject, they're probably on Similac. Okay, let's just relate them to a baby. All right, they're on Similac. Sean is on steak and lobster. So if you're trying to have a conversation with Sean about this industry and what's going on, you're not going to compete unless you know the industry, because he's going to just blow your mind understanding what this is. So when we talk to people, the first thing we have to understand is that I can't tell you how many times we have a conversation. Oh, I don't want to get my company taken over. And we're scratching our head like, what? How could this happen? If you set your company up right, you don't have to worry about getting your company taken over. But that's what you hear. So now, I'm like I said, I'm going to set it up and Sean's going to knock it out the box. But think about this. Bill Gates, not Bill Gates. Let's go. Bill Gates used to own, I think, what was it, Sean? He owned 1 billion shares?
Something like that, yeah. He actually have 2 billion. Well, you mean personally?
Yeah, personally. He owns something like 1 billion shares.
Something like
So
that. I don't remember.
when you were buying Microsoft stock, guess whose stock you were buying? Bill Gates. So it went down from a billion to 900 million to 800 million to he may own something like right now, I don't know, 600 million shares. But you're buying his shares. That's the stuff that's floating around in the market. So how could you get taken over? Mark Zuckerberg said the other day, something that Sean sent me. He said, well, I own most of the shares. So I set the company up. I'll never get voted out. That's how you set your company up. So
Right.
if you don't know how to do that, that's not your fault. You just don't have access to the information. Okay, find it. I don't care if you got to go over a mountain, around a mountain, through a mountain, under a mountain. Find it. Get the information so that you can set yourself up so that you don't get taken advantage of or you don't get overthrown. I'm done. You got to show it.
Yeah, yeah. You know,
Hold on, let me go before Sean goes.
oh,
Let
go
me
ahead.
go
Go
before
ahead.
Sean goes. So, to your point, Mark Zuckerberg owns 13% of Meta stock, but controls 60% of the voting power. So
Yeah.
you can't take him over, but he don't own 100% of the business, and he's still a
Exactly.
billionaire.
Right. And Jeff Bezos, how much of Amazon does he own? Do Jack Ma, how much does he own of Alibaba? He's the richest man in China. I'm talking about the Ming dynasty, the Qing dynasty, the Wang dynasty, all the dynasties. It don't matter. He's the richest man in China because a few years ago he created a company called Alibaba, which is the Chinese version of Amazon.
You
Crazy.
know, I'm a numbers guy, right? And I look at the numbers, right? And then I'll look at like some of our, hip hop leaders and stuff like that, and things they say like Damian Dash, right? He said he owns 100% of the companies of his companies, right? And this is no bash on Damon Dash or anything because this is how he does stuff. But what is the amount of businesses that go out of business each year? First, like when brand new businesses, how many of them go out of business? It's a high
50%.
number, 80, 90%.
Yeah,
Yeah.
80, 90%.
So can I ask you
50% by
guys a
5
question?
years. All of it. Yeah.
Let me ask you guys a question. Would you invest in something that you got an 80% chance you're going to lose your money, 90% chance? Come on. But investors will. So one of the best ways of going broke is putting all your eggs in one basket, putting all your money into one company. I've come across companies with people with 401ks, they're broke now. Ex-football players, they're broke now. Basketball players, they're broke now, all because they put all their money into something and they wanted everything. They wanted 100%. And then when I got finished explaining to them, if you get 700 people invested in your company, and now maybe you might not own 100%, but maybe you may own 51%. That's better off because now you have all of this revenue coming in and supplying your company. Now, if your company goes broke, hey, I put in my 2,000, only lost 2,000 or whatever, whatever that dollar amount. I mean, when we took our company public, we put in minimum amount of money. We put in enough money to get it started, but then the investors' money start kicking in. So, you got to think of it like that. Any business, you got to think of it like that. You have to have. We had what 500, 700 investors, something like that.
Yeah.
So these investors wasn't scared of losing their money, right? But you can literally lose all of your money. Remember what I said earlier. Your money is always limited. It doesn't matter if you have 1 million, 100,000, or 1 billion. It's going to run out. But investors' money will never run out because there's literally millions of investors.
Can I ask a question? Did y'all know all of those investors that invested in your company?
They know 99.999% of them.
I think I knew 5 people.
Yeah.
I
So
think I knew
for
5.
everybody thinking about it has to be in your network,
Yeah.
it doesn't.
Oh,
Yeah.
people look for good ideas, right? And if you can hold a conversation and you can explain the exit strategy and what your business, the problems that's out there and how your business is going to fix it, and the exit strategy. You know, Mr. Johnson, we're looking at taking this company public based on the competitors. If we can get a $10 piece of paper, that would be, that would make your, you coming in at $1, we get a $10 piece of paper. I mean, you can see the profits on that, the ROI on that. These people will invest in stuff like that, especially if there's a significant problem in the industry.
And I think probably one of the best things about Sean and I is that we were venture capitalists before we were business owners. So knowing the industry, knowing how to get investors, knowing how to talk to investors, I believe that was probably the best part of our training and of our growth, because after that, we looked at, I don't know how many times I've heard athletes sit across the table from the owners and they're like, wow, he's no smarter than me. But guess what? The owner owns the company and is paying them millions and millions of dollars, right? But he's paying 50 other people the same thing, millions and millions of dollars. But yet they're looking and they're like, wow, he's smarter than me. I mean, how many people, I don't want to talk bad about him, how many people think they might be smarter than Jerry Jones? I mean, right? But then guess what? Today, Dak Prescott said, oh, well, we're Super Bowl contenders. And we're like, huh? we're going to be able to beat the Eagles. We're like, what? Now, you just said that, and the Eagles are walking around just 3 days ago they just crushed a team that was going for the three-peat. So I heard today that if you're hanging around Jerry Jones and he's delusional, now the people around Jerry Jones is talking delusional because it's not making sense. And you got to understand that. But that's what Sean and I did. I hate to put it that way, but we're like, hold on, wait a minute. We're smart enough to do what these people are doing. Guess what? We got tired of raising money for other people's companies. We're like, look, we can do this ourselves. We were smart enough to read, and guess what? Nobody told us we couldn't do it. That's the key thing. Our people that we grew up with, our network of folks that we grew up with, guess what they're still doing 20 years later?
30 years.
Right.
We've been doing this since the 90s.
They're still doing the same thing we were doing back then.
Yeah.
And here it is. We've now, not only have we taken our own company public, now we're working with other businesses, creating an academy, and now work with other businesses to show them how we did what we did, 20 some years ago.
We've evolved so much.
Yeah.
I love it.
We're actually, 48 laws of power don't outshine the master. We've actually outshined the master.
Very good. And see, Kyle, every time you say something you bring up make me go to another point. And now you brought up the being smarter and the sitting at the table. Obama did a interview just recently with, I can't remember who it was. There were some athletes, they run it. And he was saying that when you get to the table, you realize that the people at the table aren't all that.
Yeah. Yeah.
And I don't think they hide it, because they will tell you that they hire the best in order to grow their businesses and for them to be where they are. And I was on a panel with a guy, Mr. Deese. He said that Henry Ford would tell people that, I don't know what works and how this works or why that works, but I hire the best and they can tell you. And it's not my job to tell you why it works. It's my job to run the business. And so when you get a seat at the table, you realize that the people that are on the other side aren't better than you. They just have access. Robert Smith said that when you're sitting at the table, you have to figure out how to get on the other side. And I think our problem a lot of times as business owners is we never really think about how to get on the other side. We just want the other side to give us something. Give me a little bit of the knowledge so I can grow my business a little bit. We don't think about how do we sit in that seat. But Robert Smith said when he was trading, or when he was a broker or analyst, whatever he was at that point, he did a deal for an investor. I think they made $40 million, but the investor made $100 and something million. And he said at that point, he realized I got to get on the other side of the table to be in that person's seat, because that person didn't do any work. They just had the money.
I'm going. You know what? I'm gonna give you a little tidbit. All right, you guys are lucky that Tyrus is talking like this. I'm gonna give you a little tidbit, and basically, this is probably something that I keep close to the chest most of the time. But you got a treat tonight. Y'all better pay attention to this. We were sitting at a table, and I remember we were talking with this one gentleman, and he actually was a public traded company. Now, you got to ask yourself this: how many times do you get a chance to sit down with somebody that owns a public traded company? So if you don't get access to that, then you'll never know. You guys got access to us right now. We talk to you on a weekly basis. We share with you what you're doing. But guess what? You don't understand how valuable this time is. Some of you guys are probably watching TV or looking at something else or not paying this, listening or whatever, and missing nuggets that we're dropping. But when I sat across the table from a guy that was a stockbroker, and you know what he said to me? He said exactly what you just said, Tyrus. I didn't have to hear this from Robert Smith. I learned this 30 years ago. He said that I realized that I need to be on the other side of this table, not selling stocks, but be on the other side of the table where that person was the owner of a public traded company. So he basically turned around and he became a public traded company. And then I just said to him, how'd you do it? And he told me how he did it. When he told me how he did it, it made sense to me. And you know what he said to me? He said, Kyle, you're going to be all right. I said, what do you mean? He said, because you're a good guy. And I remembered that I had to keep that at all the time. You know what? You got to be a good guy. You got to take care of the investors. There's a bunch of folks out there that blew their opportunity, blew their deal. You know why? Because they were greedy.
Yeah.
And all they did was try to take advantage of investors. And when you do that, there's so many. I know, Damon asked the question, where do you find these investors? They're out there.
They're out there.
The access. But
Yeah.
you can mess up so many people if you don't do things right. And he said to me, Kyle, you're going to be all right because you're a good guy. And that right there, he was the one that I bought my first public traded company from.
Yeah.
Access.
Can I add on to what you're saying, Cal?
Yeah.
I remember at the Power Network, right? And this Damon, you're on your mind, right? You're on my mind. So basically, I remember I went to the Power Network, and we're looking for all different types of businesses, right? And the speaker, who happened to be a billionaire, was there talking, and basically he came over to our section, and I told Cal, I said, I'm about to go over there and talk to him, right? So I walked over there, gave him a little elevator pitch. Next thing you know, we exchanging numbers. And this is a legit billionaire. Sometimes you got to take advantage of the opportunities and not be afraid to hear no. A lot of people, they don't want to hear no. It doesn't bother me at all. That's one, the more no's you have, the closer it comes to yes. I guess that's what the saying is, right?
Mm-hmm.
So you can't be scared to hear no. You got to take your chance, and you got to be ready for it, So all businesses should have an elevator pitch, something that you can say, 20 words or whatever, 30 words to get the general idea across, to get the opportunity across, and see if they bite on it.
That's good. Since I've been jumping on Kyle's stuff and saying let me talk about what you just brought up then, Sean, elevator pitch. An elevator pitch isn't for you to close the deal right there. The elevator pitch is for you to get the person interested enough for them to say, tell me more. That's it. You just want to open the door. You want to exchange the number. You want to get some coffee. You want to do whatever you need to do to have a second conversation. I think some people they want the elevator pitch. They trying to read a book to the person, and you've lost them. You've lost them at that point. And to Sean's other point of being ready, a lot of us, we will walk up to someone that we want to do business with or that we want to feel like they can help us in some kind of way. And when they say no, we're devastated. We're done. We walk away. And then that person may come back and we too bitter, or we not in the place, or we didn't continue preparing, and we're not even ready for the opportunity. So I went to somebody recently as well, and I know that they're trying to do something major. Major. And I said, well, what's holding you back? And they said manufacturing. I said, well, why don't you build your own company? And he said, well, you need capital for that. Or build your own manufacturing facility. He said, well, you need capital. I said, well, how about you raise the capital? And then I said, do you have any plans to take that company public? And he was like, you know what? I have been reading and looking for something about that. Now, between that conversation and now, he's gotten busy. But that doesn't mean I quit, or that doesn't mean I throw it away and go. It means I kept in the back of my mind that he's interested. Now, as things slow down, I will bring the subject back up again and then give my elevator pitch a quick, you know what? We had a conversation about you taking a company public, raising capital. If you do this, this, and this, you probably can get that done. That will probably lead him to say, tell me more. Let's set up a call with me and my partners, and we'll go through everything, answer any questions you got. That's it. That's it. And as a business owner and as an investor, when you really put on an investor mindset, you basically walking around with an elevator pitch to everybody you talk to. What are you working on? What are you doing? This is what I'm doing. This is what I got going on. I'm not selling, even though I'm selling.
Yeah.
Because I'm not asking for the sale. I'm framing the conversation around the sale. I told a panel earlier too, I told them that they should read the book Never Split the Difference by Chris Voss about the art of negotiating. Because every time you have a conversation with me, I'm negotiating, whether you know it or not.
Exactly.
I'm not trying to manipulate you, but when you talk to me, I'm negotiating something.
Always negotiating. Closing of
Tra-
something. Always.
Trading value. That's, you have to take inventory and ask yourself, am I getting value from the conversation that I'm having? Am I delivering value in that conversation? Or are we just shooting the breeze? I don't shoot the breeze no more. I want to talk to people who want to talk to me about elevation. Kyle called me today and he texted me and said, you got a minute? I said, oh, what do you want? What do you want? But I know he's calling for a reason. Call and tell me we got a sale. I said, let's go. What phone calls are you getting in the day? You got to ask yourself that. Now, as we get close to approaching our hour and we start wrapping down, winding down, we talked about tonight the difference between growing and scaling, starting out with sales. If you're bootstrapping, you may be doing a little bit of profit. You need to focus on that so you can reinvest in the business. And then we talked about raising capital to invest in your business and leaning on that capital. And so you, as the business owner, need to shift your mindset. I 100% believe with all my heart that if you are trying to hold on to 100% of your business, you won't be in business forever. And you won't really hit the 7-8 figure mark. You'll make a living. You'll be comfortable. You'll do 6 figures. You'll go through the blood, the sweat, the tears when you could just go to a 9-to-5 and make the same amount of money. But if you really, really want to grow that business, give up some ownership, get you some partners, and start raising the money from investors to actually grow and scale that business. It goes a lot deeper than what we can give you in an hour here. And quite frankly, we shouldn't give it to you for free anyway, because we know when you buy something. I was on a call in an actual membership I was in with a group of people, and the guy told the coach, he said, I'm paying attention to everything I'm telling you because I'm paying $2,500 a month to be here. He said, I'm paying attention. Everything you tell me to do, I'm going to do it. Why? Because when you make an investment in yourself, you should demand a return. But when it's just free, I may do it, I may not do it. I don't feel like doing it today. There are some people who take advantage of free and they do really well. Those are your probably 15% in the world that are just highly motivated. Those are the people that they say get it out of the mud. But for the majority of people, you don't take it seriously until you pay for it. That's why you better not scuff up my Jordans. I paid $140 for these. It's the
You know, it's
mentality.
funny, Tyrus, you mentioned Jordans. Did you see the people in line and fighting and stuff?
Fighting,
They
fighting
don't
over
even own
shoes.
for some shoes. Why not own the Jordan stock? Why not create your own brand
Exactly.
and make that into shares and then go public and make it into stock? You
But
know,
see, that's it. They got us dazed and confused. And we sit up there, when we could be turning around and there's we were talking about Sean, I think we were talking about this the other night. There's five minority owned billionaires in sports. Uh, Jordan, Jordan, LeBron, Shaq, Magic, and Tiger Woods. All of them are billionaires because of partnerships. Look at what happened to P. Diddy when the partnership broke up. He lost his close to billionaire status. Look at what happened to Kanye West when he lost his thing with Adidas. He almost, basically lost his billionaire status. I think he's back there now because he formed another one. But it's all based on partnerships. With that kind of money, with that kind of influence, you should be a public traded.
imagine if Kanye was publicly traded. Jeez.
You wouldn't be concerned with the partnerships. And it's crazy because you think about that. Sean sent me something. The guy was talking about it, but it's exactly right. You're a billionaire because you're a partner. But guess what? Nike is public. You know what I'm saying? They're publicly traded. So you can't tell me. And I just for some reason again, you got to be on Similac because why don't you know to try to do this? How are you a billionaire dealing with other people that you've partnered with, but you're not even thinking about taking that company public or at least taking yourself public? It baffles me and I don't understand. And that's why I said that's why we created the Capital Raising Academy because we have to educate people and let them know that they've got access. How many people in here can ask somebody what does the Jobs Act mean? It was created in 2012. 2012, the Jobs Act. But do you know that that's where Kickstarter, Jumpstart, and GoFundMe came from? It came from there. So if you don't know what the Jobs Act is and what it stands for, you need to be in our class. You need to be in the Capital Raising Academy because that right there is for you. And one thing that you said, Towers, that I want to talk about, you talked about Henry Ford, and the one thing he said he could go to ask anybody a question, hit a button, anybody come answer a question. The one thing that people might not know, he only had an eighth grade education. He had an eighth grade education, Henry Ford. But guess what? He came up with the project. Not only that, he took the best people, like you said, that were around him. Do you know the Dodge brothers came from Ford? Do you know Iacocca, Lee Iacocca, came from Ford? He created the 65 Mustang. That's a good year, by the way. Do you know? I mean, there's so many other people. I think Plymouth came from him.
Yep.
Do you know Shelby, the Cobra, the engine in the basically in the Mustang, but the Cobra, the car from the '60s, James Dean. That's Shelby Cobra.
So
That's
so basically he has smart people around him.
correct, crazy. Why don't you do that? And we think about it. He has smart people around him, and he had an eighth grade education. So now we got all these people that are degreed up, but they continue to want to work for other folks. That's what I mean. It's just amazing. Again, you got to be on Similac, and it's okay to start off with Similac, but you got to get the steak and potatoes one
Yeah.
day, sooner or later.
Since you
One thing
bring
too,
up,
real quick, Tyrus. I'll mention this
yep.
too. We have a 3-day challenge coming up, March 25th, 26th, 27th, 28th. That's 4 days, right? 4
Because
day
that's the
challenge.
bonus day. You ain't supposed to
Bonus
tell
day.
about the bonus day.
Oh, sorry about that. Tyrus, it's getting kind of late. You ain't mentioned it yet, So I don't want you to go on and cut it off real fast. But are you going over it or what?
Yeah, I'm gonna hit the
Okay, all
challenge.
right.
I'm gonna hit
Sorry
all
about
that.
that, guys. I ain't mean to ruin it. Sorry about
Boy,
that.
I tell you what.
Anytime.
So we go now. Since Sean did let the cat out of the bag, I'm gonna say this and then we'll go there. Just like all of those people came from Ford, they said so many billion-dollar companies and so many ideas have come from the people that were with in the beginning with Uber.
Yeah.
I believe it's like 37 companies were birthed out of the people that was in the core of the Uber team in the beginning. Innovation. These people go out and build. They don't just stay. Phil Knight. You talked about Nike being a publicly traded company. Phil Knight, I think, is worth him personally $4 billion, something like that. He owns 2.3% of Nike shares. Oh, what? He don't own 100%? No. Now they have a Nike Trust that holds 17.8%, but that's still way less than the 51% that you want to have to control. You got to look at, I always tell, especially entrepreneurial based business, look at big business because they established the blueprint. They established the blueprint. So, as we get ready to wrap up, March 25th, 26th, 27th, and now 28th, your bonus day, we have a challenge. That challenge is going to teach you everything about growing, starting, growing, scaling, and exiting a business. So in 4 days, you're going to walk away with the information that if you implement, you'll be able to, wherever you are in your business journey, go to the next level. So if you're starting, you can go to growing. If you're growing, you can go to scaling. You can go to scaling, you can go to exit. So wherever you are, you can do that. The site, I want you guys to do me a favor. It's events.legacywealthcapitalgroup.com. Now, we were going to do this event live in Charlotte in person. We switched it to virtual. So tomorrow, if you go there tonight, you're going to see it live in person. You go there tomorrow, you will see it virtual. So wait till tomorrow. I'm going to send you a good old email if I can catch you. Let me see. I can see some people who liked it. I got your information. But just join our email list at legacywealthcapitalgroup.com so you can get the email to get the tickets as soon as we release them. Because we want you in the building. This challenge is what we're using to kickstart everything that we're doing. We're getting ready to raise capital ourselves for our own business. So we say this every week, and I'm going to keep saying it because they say people need to hear things about 10 to 18 times before it actually sink in their mind. We're not here just telling you stuff. We are here doing the same thing. So we're getting ready to raise capital for our own business. We're going to take our own business public. We're going to merge and acquire and grow and scale other companies. You will see us do this as well as share the information with you along the journey. But you have to be in the building. So when you talk about, well, where do I find an investor? What room should I be in? Be in our room. Because I can tell you this. If I was in a room where everybody paid $40,000 to be in and you can't get in that room, you can get in my room and I can give you the same information that I got out of that room. If I go to an M&A conference and I'm surrounded by everybody who paid thousands of dollars to be there and they're high net worth individuals and they're looking for companies to invest in, but you can't get in that room, come to my room and we can get you the same information because that's how it works. Why do you think Robert Smith partnered with BlackRock or Blackstone, whichever one he did? Not only to grow, but information. They 10 times bigger than him, if not more. He's probably a couple $1 billion assets under management, 100 billion maybe, 200, and they trillion. Everybody gets in the room. So you got to get in the room. So write that site down, events.legacywealthcapitalgroup.com. Go there and get in the room. It's going to be from the comfort of your own home, 12 p.m. to 2 p.m. Eastern each day. And we're going to walk you through all the steps again to start, grow, scale, and prepare to exit, meaning sell your business or IPO your business. No longer are we talking about just closing a business and shutting it down. That shouldn't even be a thought. We're going to either sell it or go public. And then you can choose what happens after it goes public from there. Any last things from you guys before we get out of here?
Yeah, I just want to say this. When I first got into business in the 90s, after I got out the military, I didn't know anything. And it's going to be people on this podcast that don't know anything. But as you um, start hearing the words a lot more, you're going to start understanding it. And obviously, our class is something that will teach you the basics, teach you, everything about raising capital and raising capital for your own companies, merger, acquisition, etc. But it'll help you get used to it. So again, for some people, this is new. This is extremely new, but this is how the world, this is how the United States create the billionaires, right? It's you had a percent of, do you have a percent of billionaires that's not publicly traded, Tyrus? Do you know that?
I don't know that, but let me see if I can
But
get it while you're talking.
it's not that many. So if you want to take your business to the next level, our class is important because I'm telling you, it has all the information you need to be knowledgeable of this industry. And I wish I'd have had something like this when I was young. When I got out the military, because we didn't have nothing like this. Even when we had our first publicly traded company, it was times that Kyle and I was looking at each other like, what do we do? Do we do this or we do that? I wish we knew somebody that can help. I wish somebody could give us the knowledge. We couldn't call up Bill Gates or anything, but I wish somebody could give us the knowledge on where to go from here. Well, we know that stuff now. We took many companies public, raised capital on many companies, and basically you will learn all of that in the class. Class is at capitalraisingacademy.com. That's capitalraisingacademy.com. Go there. Cal got a book out. It's called Going Public. I have a book out. It's called The Business Bible. Again, we have the call room, and 8 hours a day, 5 days a week. All they do is speak to investors, and we have the class. The class teaches you everything you need to know, and that's about it. But as far as your business, you got to try. You got to try. You got to try to speak to people, and you can't be afraid to hear no. Thank you, guys.
Yeah, thank you. Once again, yeah, thank you, Tyler, for putting this together for us again, Legacy Wealth Capital Group. Just so excited to be partnered with you, Sean and I. And I would just say I close tonight with saying this: be prepared. You made the statement tonight about that elevator pitch and things like that. Be prepared. But I think more than anything else, success is when opportunity and timing meet. And I remember how we got started with JMI is we had a gentleman and he said, "Look, I believe in you," and he gave us $5,000, $5,000, and that's how we got started.
What was the start?
Let me just with you, $5,000 ended up being a public traded company. 10,000 square foot office, over 500 investors. Reverse merger, Bell South, MoneyGram deals, Sprint. I mean, Sean flew over to Hong Kong and bought a company, Wi-Fi. I mean, all of this, from a $5,000 investment. So I know that if you guys have some business out there, you guys talking about raising 100,000 or 50, 150,000 or whatever, 500,000 or a million. For us, it started with $5,000.
Exactly.
Look forward to seeing you in the academy.
And there you have it. I thank you for joining us. We had some very attentive people. I see some numbers, and you guys kind of hung out with us throughout the duration of this. We don't take it lightly. I definitely appreciate it. Demond, you the rock star, sir. You stuck with us, hung in there. We love the comments. We love the feedback, and we love questions. because it's even easier to get on here and answer questions than for us to just walk through and talking. Because if we know we're answering questions, we know that you are moving and you have the next thing that you need to do for you to be successful. So we appreciate you, Damon. We appreciate everybody else for hanging out with us, and we will see you all next week. Talk soon.
I'm seeing you, Devon.